Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in today's video I wanted to discuss some ideas with you in Amazon. So of course today was Amazon's big Amazon Prime sale, and there's nothing that I love more than fading events like that, because I think it's a perfect example of buy the rumor, sell the news, and that's exactly what we saw today. Now, I have been a little bit more cautious in Amazon after we took this previous swing high to swing low and made such a clean 1272 extension. We knew that it's tough to buy at those types of levels, and we saw a very nice pullback from this. Now this is a great example of showing you, okay, we made that 1272 extension, and the broader extension would have been made off of that as well. But Fibonacci work is very good about working in fractals, meaning you can run it off of your smallest time frames, but you can also run very large swing high to swing low, and you can see how that also did a very good job of pointing out this level at 756. Now you didn't hit it to the penny, but you got pretty close. And another big thing that I find to really be helpful with this type of work is coming in and looking at timing. That's kind of where I got the, I apologize for the cheesy title in today's thing, but it's like, alright, Amazon Prime Time, it was a good spot to look at timing for a potential high. Now what does that mean exactly? Well, what you want to do is come back and just look at it, and you can use this in Thinkorswim by grabbing the time extension tool. And in this case, what I'm looking at is just showing other examples where you have seen similar rallies. So if we come in, and the example I wanted to look at here was from in April. And all we're looking at, it helps if you zoom in a little bit, but all we're looking at is taking this swing low and then projecting it to your next swing high and saying this was a given value in days. Then you come in and look at the exact same thing from this swing low to this swing high. So if we have a general rally for X number of days, seeing that exact same number of days would give us a good place to look for a potential failure. Now there are other levels that also coincided with this, and of course it's always going to work best when you can have multiple layers of timing that overlap with each other. That will tend to give you a better setup, but this is one of the things that I love about Fibonacci, and part of why it's what I really revolve with in my trading, because if you can just match up the X and Y axis based off these ideas, it can give you a much better opportunistic point in your trading. Okay, so we've identified that, we've seen where it's failed from, so on and so forth. Now if you come back and add the addition of your voodoo lines into this, one strategy that I think will be interesting is looking at some range. There's two essentially that I'll show you here, and you can look at whichever one makes the most sense to you. I look at this and say, based off of the contracts that you have that expire this Friday, I like the idea of looking at something to the short side based off of the 750 calls. You can see that this is where the open interest in this stands out the most, and I think you'll be able to collect some decent premium in that over the course of the next couple of days. I'm going to look to do it through an unbalanced butterfly. You could also use a short call spread. You could also use something like an iron fly, and I wouldn't even mind that too much because you do have a little bit of activity here on the 750 puts. But that's the core of the idea that I would work in 3 days out. The reason why I wanted to elaborate on this a bit more is because not only do we have those that are expiring in 3 days, but you also have this 10-day out expiration that we can still work with, because implied volatility is not really going to hit until that next series out. And of course that will be primarily earnings driven. So you've got the ideas 3 days out, and then if you come and look at this, we've got an expected move of, let's just call it $25. So if we were to come in and say we're trading about 750, selling the 775 iron condor, we'll adjust our call strike to be 5 wide, and then we'll do the exact same thing to the on the put side. So this would imply the 725 by 720. And that's going there at $1.65 credit. So I like the idea of being able to put that on in the exact same way that I've been working Netflix, because you're just kind of seeing, it's like that initial euphoria kind of gets hit, where everybody that was looking for it to run into earnings kind of, it dampens that mood a little bit, and then the stock just goes into this consolidation. Netflix saw this based off of the Comcast deal. Well, then it got hit pretty hard, and it just goes into this where you've got so much emotion on both sides that ideally it consolidates into that report, and that's another way to take that strategy and apply it to Amazon. So I hope you found that helpful. It gives you a couple of things to include with your trading as we get into the next week. And then of course I wanted to make sure also that you are aware of Bruce's class that's going to be coming up. It actually gets started today, July 12th. It's going to go from 6 to 9 for the instruction part of it, and then he will actually be doing some live trading on Thursday, July 14th. So if you like ideas like that iron condor and similar strategies, I think that will fit right in with this, and I hope to see you there.